This is Sovereign Debt, a podcast on greening the global economy and debt sustainability. I'm your host, Jill Doshi. So welcome, everyone. I know it's been a while since we have recorded a podcast. We've been very busy. And as I promised, I was wanting to get more and more voices actually from debt managers and folks who are actually on the front lines of these issues. And they've also been very busy. But I was able now here, we're recording this from Sharm el-Sheikh in Egypt, from the African Development Bank meetings. And I am joined today by Dr. Baba Musa, who's the Director General of the West African Institute for Financial and Economic Management, also known as WAIFEM, which is based in Lagos, Nigeria. Baba and I have known each other for years, and so it was a pleasure to see him here, and I've grabbed him to join us today on the podcast. So thank you so much, Baba, for joining. So for those in the audience who aren't familiar with WAIFEM, perhaps just by way of introduction, you could give us a few words about your work in West Africa.
Okay. The West African Institute for Financial and Economic Management, WAIFEM, is a capacity building institution that is set up in 1996 by the Anglophone countries of West Africa. That is the Gambia, Ghana, Liberia, Nigeria, and Sierra Leone, with a mandate to build capacity in the area of governance and institutional arrangement, macroeconomic management, fiscal and debt management, well as financial sector development. So our focus has been in these four critical areas. Our audience get across all the member countries, with the Republic of Guinea being an observer. But we extend our capacity building to the entire West African countries and the whole of Africa. As a matter of fact, our audience or participants now extend to Latin America. So
really?
Yes.
I wasn't aware of that.
Yeah. So we do capacity building in these critical areas. And since 1996, after it was established, we have had over 852 training and capacity building programs that benefited over 21,000 participants around the world.
That's amazing. Well done. And I've been a part of some of those workshops with you. And so I can say on the ground just the impact that you're having on so many government officials in those critical areas. And I can imagine that in today's context, you're getting probably quite a lot of requests from around the world because there is a lot going on.
That's correct. There's a lot of requests going on. And I think what makes us unique in West Africa, in Africa, is a partnership arrangement that we have with world-class institutions, international institutions like the IMF, the World Bank, the Commonwealth Secretariat, the United Nations Institute for Training and Research, and many other capacity building institutions around the world. So we try to have synergy in our capacity building efforts. We target the public sectors, including the parliamentarians, to build their capacity. So in terms of demand for our training programs and our capacity building events, it has been enormous. And of course, the challenges that are facing the globe now also increase or call for an increase in capacity building. So we do experience high demand for training in our institute.
I can imagine. So turning to some of those challenges, I mean, we're in the aftermath of the pandemic. We've had the Russian-Ukraine war, which is, of course, ongoing and in some ways intensifying. We have increased food insecurity across many countries. With all of this context going on, can you share with us what you're hearing from your participants in your member countries? What are the kind of main themes and challenges, and what exactly is frontline for you right now?
Yeah, what is frontline is actually the fiscal pressure that all these shocks brought to the member countries. Shocks are unforeseen. Already prior to the COVID, virtually all countries in West Africa, and in fact, many countries in Africa were having very limited fiscal space. The debt situation in almost all the countries was already at high risk of debt distress, or some countries, they were at moderate risk. But then all these shocks brought a lot of fiscal issues and necessitating governments to, do some interventions that were not foreseen in their budgets. It also, made them to borrow more. So it wasn't the debt situation in most of the countries. And in fact, moving the countries from, in some cases, moderate to high risk, and in some cases, from high risk to situation of debt distress. So the number one issue that is facing almost all the countries is the lack of fiscal space. Fiscal space for investments and fiscal space to spend more money. So virtually what we have seen over the last 2 years, if I can be very specific, is that the net financing in most of the countries appears to be negative now. So which means that countries will have to find a way of mobilizing more resources to be able to fund their budgets. That's one issue. But then, of course, there's also the issue of political economy. But what I mean by political economy is that in our member countries, for instance, out of the 5 countries, 3 countries or 4 are facing election or have had election. It gets tricky, as you know, elections come with a lot of expenditures that are unforeseen. And of course, that tends to also throw away government fiscal policy, because politicians will want to meet certain expenditure to attract votes. So the issue of political economy is another thing. But you have mentioned another important one, which has to do with the food security. The Russian-Ukraine crisis brought about a lot of food shortages in the region, and it has made prices of food to increase, and it was in the inflationary position in almost all the countries. So the uncertainty of food security is high. And then, of course, the final pressure is the climate change.
Right. I was going to ask you about that, because, of course, when you have very limited fiscal space, your first priority, and particularly in a moment of food insecurity, your first priority might not be to think about the environment. And so those investments for resilience and adaptation, not to mention clean energy, etc., kind of fall by the wayside.
Yeah. So these are challenges that almost all the countries are facing right now. The global change in weather, we are seeing it, I think, is becoming more and more issue of financing in West Africa. In many countries, floods are now seen as a regular events. In all the countries, every year we experience heavy flood. Desertification is increasing. Lack of rains is there.
Which, if I know neither one of us are a scientist in this, but for just some listeners, it's hard to kind of just understand, how can we talk about desertification and flooding at the same time?
Yeah.
Do you have in your capacity, I know you're just a Superman, so can you just kind of unpack that a little bit quickly? We've been experiencing rains that are unpredictable. Right.
In many times when you have the rain, it comes so heavy. that within 2 days you will have like a 2 weeks rain under normal situation. So when you have a 2 weeks rain packed into 2 days or a day, it tends to come with heavy flood.
Right.
What I mean by the irregular rain, we have seen that, a 2 weeks rain, just can occur in 1 day. Mm-hmm. First, the grounds are dry, so they cannot absorb that much quantum of rain. The drainages are also small to the extent that they can't, accommodate the amount of rain that fell. So it goes flooding the houses, washing away, finding a path that were not hitherto known. And so we have a lot of building collapse. We have a lot of farms being washed away by the rains. And so when farms are washed away by the rains, then it creates again worsening the food security situation.
Exactly. So it exacerbates the...
Exactly. But then
people move, right?
Yeah, that's correct. So, and then we have also these grasshoppers that come whenever rains obviously they come from the desert. So anytime you experience that kind of rain, they come along certain paths, and of course they come in millions. So
and they eat everything in their way.
They eat everything, and so these are the disasters that we've been facing, which were hitherto not known to all. So those are the kind of floods that. But then also in terms of desertification, you could see that. The desert is actually encouraging more and more into the inner part of the country. So lands that were formerly used for farming are no longer going to be useful again because of the sun. The sun is coming to take over the arable land. So those are experiences that too.
And then those people then have to be... Either they voluntarily kind of leave and they become internal, displacements,
that's correct. So
you have to, as government, kind of relocate them.
That's the cycle we've been facing. Sometimes people have to leave to some other areas, and when they move, it creates some tension. When governments intervene, it cause some kind of financial stress on the government. But you see refugees now moving all around the West African countries.
Right. So, and this is, and then what we're, again, coming back to the kind of what we were initially talking about in terms of fiscal pressures, all of this adds to fiscal pressure.
That's
so
correct.
You're either kind of cleaning up, or you're having to build new housing,
That's
or
true.
you have cities that are becoming, kind of overburdened.
Yeah.
We haven't even mentioned the other big stress, obviously, going on, which is the unfolding crisis in Sudan. And so you also have, I understand,
That's
a lot
correct.
of Nigerians coming home.
So the estimate is that we're having over 800,000 Nigerian students in Sudan.
That's a lot.
That's a lot. But in addition, we have about triple the number of students that are Nigerians who are resident in Sudan. So we are talking about a little over 2 million people moving out of Sudan as a result of the crisis back to Nigeria and some other countries in West and Central Africa. So that again is a pressure because exact pressure on government, because first you have to evacuate them. But in addition to the evacuation, when they come, you have to resettle them. Some have been away from the country for perhaps since independence. Some are as old as 30 years, 40 years in Sudan. So when they come and they come back empty-handed, so for the government, they have to settle them and then, of course, find a means of giving them some relief, at least where they can settle for some time before they get something. So again, it exacts another pressure. Remember we are just coming out of COVID. The COVID pressure is still there. And then we had the Russian-Ukraine crisis. So that pressure is still there. So it's now almost not twin, but rather a triple kind of shocks.
Yeah, I think I've heard all sorts of the multi-crisis, the polycrisis. I mean, it's quite daunting. But coming to the Nigeria context a little bit, there's new hope, perhaps, because we have a new government coming in. You've described all of these incredible challenges.
Yes.
Quite a daunting task. And of course, like you said, the kind of very constrained fiscal space. We didn't even touch on the kind of the rising interest rates globally. So any cost of borrowing is increasing. So this is just a terribly complex kind of outlook. You have a new government. What can you share with us about? I mean, we understand some of the challenges that they're facing, but what do you see as kind of the prospects?
Well, the new government is coming in to face a situation of fiscal constraint, but the hope is that if the past can predict the future, the new president-elect appears to be someone that had history of using technicians that have the requisite experience in his cabinet. And he is known as someone who actually focus on domestic revenue mobilization. At the same time, also is keen in building infrastructure.
Because he has quite a track record in Lagos.
Yes, he had an excellent track record as a state governor in Lagos. He has had 2 terms. And during his 2 term, I think he was judged as one of the best governors that built infrastructure and that also made Lagos to be the highest revenue mobilizer in terms of domestic revenue mobilization, which has been a very serious and critical issue for Nigeria. When he was a state governor, he was known to initiate the light rail. The light rail is one of the critical needs of Lagos that improve the transport situation in Lagos.
Yeah, public transportation.
The public transportation. Yeah. He built the BRT lanes in Lagos, thereby easing the traffic situation. But above all, he has built very many roads. He had also built or expanded the port and expanded the business in Lagos. He initiated building new airport at Lekki. So quite a number of giant infrastructure were actually initiated by him. So he had that good track record. And if you have had state governors like him in the 36 states of the Federation, the level of infrastructure in Nigeria will have been far above what we are experiencing. So we do hope that he's going to repeat that kind of governance in the federal. The challenge is that Lagos is one state, although one of the biggest state, but then now he has about 36 states to govern. So
yeah, it's a
different ball game. But we know him. He had a good track record. So I believe that with good cabinet, they will support him and will move Nigeria forward. So we see a bright future, coming for the country. I do hope also the fiscal situation will improve.
Right. Well, and as you said, there's kind of there needs to be a strategy of domestic mobilization as well as attracting then kind of foreign direct investment and
Yes. Yeah. When I talk about the domestic revenue mobilization, if you look at the revenue as percentage of GDP, it appears to be the lowest in almost all the countries in the world. Mm-hmm. Right now, Nigeria's revenue as percentage of GDP is about 6.5%, wow. Compared to the average of about 15% in the region, and maybe 18 to 20% if you consider low to high-income countries. So for Nigeria, it is, I think, an unacceptable situation to have a revenue to GDP of 6.5%. If he can raise it to a little bit above 10%, I think the need to borrow will drastically reduce, and he will be able to have enough, resources to invest in the country, and of course, service the existing debt. The only challenge is that, of course, he has to also find a way of reducing the domestic debt, because the current debt service that Nigeria pay is about 2 trillion naira, which when you translate it to dollar term is over $3 billion just for the domestic interest payments. So I think it's when you compare it to the external, which is just about 300 billion, 300 million. Sorry, it's it's unacceptable to have that high level of domestic interest payments. So that they have to have a strategy to reduce that, which will also give government some fiscal relief.
Some space. Okay, and then widening the aperture again, coming back to West Africa and perhaps just the whole continent. One issue that I do want to just get your views on is China. We've touched on kind of the debt pressures of many countries. You mentioned kind of the high risk or even in debt distress of many countries. There's the ongoing conversations here at the African Development Bank meetings, but even, in other fora around the world, there's the Global Sovereign Debt Roundtable discussing, the common framework and where do we go from here? And China is obviously a big part of all of those conversations. I know it's a difficult question, but I'm just going to give it to you open-ended. What would you like to say about China?
I think the China issue in Africa has to be, understood very well. Let me start by saying that I think the Chinese took a very good opportunity of a space that was created, and they came in and filled the gap. What do I mean by this? When you look at the financing situation in Africa in the last 10 years, you realize that, of course, that is post-debt relief. So for many countries, a borrowing space was created. But for those countries, they are also faced with their need to build infrastructure. And at that time, the financing situation that is coming from the multilateral institution is not as attractive as that of the Chinese. What I mean is that it takes much longer time to get funding when you have any project you want to, initiate in a country. Then the Chinese came and found the situation where Africa needs investment in infrastructure. The borrowing space was there, and it takes much, shorter time to get loan from China. So you have politicians who are elected from offices, who have political promises, and of course the need to build the infrastructure was there. And if you go to the West to obtain a loan, it takes years. In fact, it takes some time, the period where the politician will be in the office. So you have the Chinese who are there ready to give the loans. Mm-hmm. So, of course, they came and filled the gap. So many of African countries went to the Chinese to borrow and start building infrastructure. And we have seen the impact of the infrastructure in the region. At least when you talk about rail situation, in many countries, the Chinese came to build the railway system or revive the railway situations that have been down for over 30 years or 40 years in some cases. So rails are now working. They came and expanded the port system in many countries, so it expanded the businesses. They came and built airports in many countries, and you could see that the air transportation have been eased, and of course, you have new infrastructure. There are several investments, including roads, where the Chinese came and built in Africa. So when you take the last 10 years and evaluate the level of development of infrastructure, you will see huge increase in that. So I think the context of the Chinese in some cases is stated. If I give you the example of my own country, Nigeria, out of about $41 billion external debt, the Chinese only account for $4.5 billion. as at the end of 2022. So virtually, it's just about 4.5% of the external debt. But of course, I will agree that there are certain countries that are heavily exposed to the Chinese loans. But the overall issue is that there's need for infrastructural development. Someone have to fill the gap somehow. The Chinese are there ready to provide the loans to give. So what does it mean? It means that we want the multilateral institutions in the West, the bilateral agencies will need to look at Africa in the context of infrastructure building and see how can they also, engage African countries in building this infrastructure. And of course, relax some of the heavy conditionalities in getting soft loans from there. But overall, what we need as Africa is concessional financing, whether it is coming from the Chinese or the multilateral institutions or the bilateral institutions. I think what we need is engagement and also a concessional long-term financing that will assist African countries to build the infrastructure. That will improve the economic situation in Africa and reduce the heavy economic constraints that we've been having.
I hear you, and I saw the whole process of the arrival of the Chinese, and like you said, they came at a moment where there weren't a lot of other lenders available. Concessional finance was constrained. Commercial banks from traditional, lenders was also being decreased because of regulatory and compliance issues and all sorts of other kind of dynamics post the global financial crisis. And so as you said, there was a gap, and they certainly stepped into it. But I think it is also kind of fair to say now, kind of on the other end of that cycle, that we're also seeing that when distress does hit, there is a difference between having, kind of those traditional partners as your lender versus having China as your lender. And this is the difficulty that I think we're seeing now when we have moments of distress and you do need to restructure and sit down with creditors. There is a difference.
There is a great difference. And this is why I said countries need that engagement. And I think we have learned our lesson also as Africans and as governments. So the situation post-COVID has revealed a lot of issues, and going forward, certainly, I think both the West and Africa need some kind of engagement and capacity building also in some cases. So we need to understand each other and also need to also build the capacity to negotiate and, of course, obtain soft loans.
I think so. And I think institutions like yours can play a critical role in that, and also highlighting the differences. There's the availability of funds, there's the pricing of that financing, but then there are also all of these other terms and conditions. And so, like you say, kind of building that capacity, so all of that is taken into consideration.
Yeah, very correct. I think there are a great number of lessons that we have learned. I think one of the issue also is that, of course, although you have the dear need to build the infrastructure, but you can't build it at all the time. I mean, at a time. So you have to build it based on your capacity to obtain the loan and capacity to repay the loan. I think it's a great lesson that we have learned. And going forward, if you are making any projections, although you have the desire need to build the infrastructure, but then you have to be as realistic as possible when you are, you are making any kind of projection.
Then you layer into that also building the right kind of infrastructure. And so again, bringing in the climate issues that again are kind of a theme of these meetings here in Sharm el-Sheikh. And we're the theme at COP27, and we'll be continuing the theme, I think, for many years to come, is building resilient infrastructure and building, the right types of sources of power and et cetera. So, I'll have to have you come back on the show another time to talk about how do we think about development and kind of a fair development without fossil fuels, particularly coming from Nigeria, a producer. So there's a lot more that we could talk about. And Baba, I could talk to you for hours. But I know that we have to get back to the meetings here. I'm going to give you the last word. If there's any, you've already said wisdom of you've learned a lot, but would you like to give one last parting message to our listeners?
I think my final word should be to both the government of African countries that we have to cut our quote according to our sizes. When we are borrowing going forward, we should also consider the ability to pay also going forward. But finally, also, I think from the West 10 countries, I think we also require some engagement and look at the critical needs of Africa and find a way of assisting Africa to finance their infrastructure need.
Absolutely. I'm sorry, I said I was going to give you the last word, but I just want to kind of emphasize that because from what I hear, the African countries do want to engage with and continue to engage with others.
We do want to engage, and I think the notion of Africa being a raw material producing continent should be looked beyond that. I think we need industrialization, we need investments, we need to start, building our industries and of course start exporting. Not exporting raw materials, but I think something that has an added value, which we can also sell and earn more income. And I think if we approach Africa in that regard and with the kind of investment we need, I think Africa is going to prosper. Remember, Africa will be the producer of labor in the next 20 to 30 years.
You're very young.
That potential is there. So
absolutely.
Thank you very much.
Okay. Yeah. Thank you so much.
Sure.
Thanks for listening. If you enjoyed the episode, leave us a review and subscribe to the show wherever you get your podcasts.